Good morning, good afternoon, and good evening for whichever time zone you are in. Welcome to the Institute for Financial Integrity's webinar on AI solutions, real-life implementations for financial crime prevention, where we'll be hearing from two institutions who have successfully implemented AI at scale. Before we get into that though, a few key points. The webinar today is being recorded, so if you want to review it later, you will receive a link. And you're also very welcome to share it with your colleagues or connections if they would be interested as well. Secondly, feel free to submit questions through the Q&A. You'll see that on the top right of your screen. We'll get to as many as possible in the Q&A section of the webinar. And we also had quite a lot of questions that people submitted during registration. So our expert panelists have incorporated responses to as many of those as we can in the remarks that they'll be preparing today. And finally, you'll also see an area for documents which you can download. So those include resources provided by our panelists, as well as some resources from the Institute for Financial Integrity. So let me introduce our panelists. Christopher J. Zuckerman is the US Deputy Head of AML and Tax and the Head of Transaction Monitoring Oversight at HSBC Bank. His remit includes oversight of transaction monitoring, AML screening, and HSBC's US Dynamic Risk Assessment implementation, which we're going to be hearing a lot more about soon. Prior to HSBC, Chris worked for other financial services firms, including ABN AMRO, Citibank, and Bank of New York, where his experience included relationship management, credit rotations, and product sales. From HSBC, we also have Long Yi, who is the US Head of Financial Crime Detection, where he leads and oversees the financial crime detection activities and controls across the US, including transaction monitoring data, models, and controls. And he's responsible for developing and deploying HSBC's Dynamic Risk Assessment, that's the DRA, within the United States. Finally, we have Scott Werner, who is the Global Head of Compliance Operations at Block. Scott oversees the financial crime risk operations, which includes KYC, screening, transaction monitoring, and suspicious activity reporting for Square, Cash App, and Afterpay. He has more than 20 years of AML experience at large financial institutions, including UBS, Deutsche Bank, Bank of New York, and HSBC, and also as a consultant with McKinsey and Protiviti. And I'm Catherine M. Woods. I'm an Associate MD at the Institute for Financial Integrity. I'm based in Washington, D.C., and I lead our initiatives on cartels, Chinese money laundering organizations, illicit procurement networks, and emerging technology like digital assets and how AI is used by threat actors. So let's get into our discussion today. First up, what would be really helpful would be to understand from each of our panelists the scope and scale of your deployment of AI to enhance financial crime compliance. So a little bit about the scale of that, what products, what geographies, what customers does it cover, and equally importantly, what prompted your AI initiatives? So maybe I can start with you, Chris.
Yeah, thanks, and appreciate IFI giving us the opportunity to speak today. I'll speak to a number of points here. Long, feel free to then pick up on anything that I may have missed. But speaking for HSBC, at present, we're using artificial intelligence and machine learning model that we've developed in conjunction with Google for detection. As Catherine had indicated, we call it DRA, or the Dynamic Risk Assessment. In terms of scale, it's live in about 24 markets globally, including our UK and Hong Kong home markets, among others. We're also live in the US. It's covering about 90% of our customers and their transactions.
And Long, is there anything you'd like to add to that?
That was perfect, Chris. Nothing to add.
Fantastic. Scott, do you want to outline the scale of Block's initiatives then as a comparison?
Certainly, and again, thank you, Catherine, for inviting me, and Chris Long, great to sit alongside you again. Yes, so for context and scale, for those that don't know, Block is made up of Square, Cash App, Afterpay, and some other businesses like Tidal. Square is probably in about 9 different countries, but we, as a global organization, we clear about 6 million alerts per year, primarily from our P2P platform with Cash App. Our team size is about 1,500 globally. When it comes to our scale, when it comes to our sort of strategy, we have two approaches here. We are using it for highly precise risk detection models, similar to HSBC with the DRA model. And we're also using it for process enhancements through AI. So on the detection side, we have developed a number of machine learning models that are specific to the relevant typologies we see on our platform. So like layering, illicit gambling, drug-related activity, human exploitation. But what these models have actually allowed us to do is to actually find risk faster, right? Because we've had a lot of success with high precision models, meaning that in certain cases, we've been able to accurately identify 90% of the alerts that are converting into SARs or exits off the platform. And that's actually allowed us to generate alerts and have them go directly to investigations. So think of us as filing SARs almost within 48 hours and getting bad actors off the platform. We've particularly had some real success then with real-time blocking, because we are pretty good at identifying what transactions are actually related to illicit activities like gambling. We've been able to block it up front and actually reduce those kinds of actors off the platform pretty rapidly. On the process side, which we'll get into a little bit later, we've started to use automated summaries, embedded processes, AI co-pilots. But I think the main drivers for this, to answer the second part of your question, is this aligns with our purpose as an organization and also our people strategy. For those of you that don't know, I mean, with Block, our main mission is economic empowerment. We really want to drive, access to the global financial system, particularly for small businesses and the underbanked. This obviously also introduces risk. So we want to help the organization grow safely and scale safely, which is why AI and risk management matters. And then the second reason is a people philosophy. We really believe that AI will actually augment us, not replace us. And so our goal within financial crime compliance is really to make sure that analysts can be analysts. So we want to use these tools to really focus in on what matters and move away from the administrative type activities. So that's where we're at. Catherine?
Yeah, that's really valuable context, and can certainly appreciate the desire for analysts to be analysts. Back in my investigative time, there was a lot of time spent on tasks that did seem to be more preparation, cleansing data, that kind of thing. So being able to do analysis, it would be really valuable from a human perspective. But circling back around now to HSBC, you've introduced the dynamic risk assessment, the DRA. What are the differences that you're seeing between a DRA and rule-based methodologies, which are the traditional way for identifying unusual activity, which might result in a suspicious activity report? And what are the advantages that you're seeing?
So I would say that it comes down to the fact that in a rules-based environment, much like Scott had hinted at, alerts need to be investigated and dispositioned. You set thresholds, you segment, you tune it up, you have performance testing, you make sure that you're not missing anything below the thresholds that you set. So even though it's a system, much along the lines of what we've been discussing, it's historically labor intensive to operate, maintain, even if you have really good systems and processes backing those up. In a sense, with DRA and an artificial intelligence and machine learning model, we get to work backward. With an AI machine learning detection model like dynamic risk assessment, we get to train the model on what bad looks like based on transactional and customer data elements. There's still going to be a place, a limited need, if you will, for traditional rules, but it's not going to be primarily what we're going to use going forward. Rules may be used to supplement for emerging or specialized situations. However, when enough of that risk is detected, an opportunity will present itself for it to be fed into the model for training or retraining. From our perspective, two model instances, right? We have one model instance that's focused on two-legged individuals, one model instance that's focused on commercial institutional type entities. This way, we're not necessarily taking a one-size-fits-all approach. And now while our models and features are deployed to predict the potential for money laundering, very much to the point that Scott brought up, we keep people in the loop. Since it's the investigator that's then able to determine other concerns that may be apparent or what then needs to be escalated and reported. It comes back to, I would say, the why, Catherine, to your original question, as to the rationale as to why we implemented this program. We were looking to see if we could find more risk, find it faster, find it more efficiently, reduce customer friction, and at the end of the day, hopefully find risk that would be of more value to law enforcement. It's the age-old problem that industry participants have faced. The shared challenge of false positives coming out of a traditional rule-based transaction monitoring scenario system. You had alerts that had to get dispositioned, calls going out to frontline staff, calls going out to customers, and then that ask turned out to be, in many cases, completely legitimate activity. So that's kind of why we partnered with Google to explore what the art of the possible was here and bring it to life.
So to add to Chris, from a data system perspective, using a AI model, what we can also look at is a very fairly standard way of looking at different fluctuations of behaviors, fluctuations of transactions. We have very standard way of looking at features. It's taking what human decision, how a human make that decision, codifying it. In addition, if you're looking at, as a human looking at alerts and looking at using a rule-based platform, there's only limited so much you can look at. But using an AI model, we'll be able to look at a lot more, and we can react a lot more for changes in the market, changes in the behavior, changes in how illicit actors behave. And that's why we find this much more dynamic, as the name indicates, a lot more dynamic and a lot more flexible than rule-based platforms. And for some of you that work on rule-based platforms, there's a way we tune the rule-based models and we changing thresholds. Those things do take time, and then you go through the model validation, the threshold tuning. That effort is usually months, if not sometimes years, before you change your model, and that is very slow in compared to AI. So, and this is one of the big differences we see.
No, that's really valuable. So just highlighting a few of the key points that are coming through there. The first one is different models for individuals versus entities. I think, that absolutely makes sense that you can't have like a one size fits all model. And secondly, one of the key advantages that you're seeing is the ability to be rapidly responsive and rapidly adapt the models and the tuning of those models in a way which is not typically possible with some of those older methods. Really valuable experience. Thank you, Chris and Long, for sharing HSBC's dynamic risk assessment model in more detail. So if we come to you now, Scott, another key process within financial crime investigations is the alert investigation process. So can you talk more about how you've integrated AI into your alert investigation process, and how is Block thinking about that?
Yes. Yeah. And as I said earlier, right, we sort of believe that AI is going to augment us and not replace us. And so we've really used AI in the investigative process to keep the human judgment at the center, right? So our approach is really to kind of augment their experience. And there are three specific areas that we've started to use AI now within our actual process. It's smart transaction analysis, right, which is effectively our summarization of complex transactions. As many of you know who have done alerts, that you could have hundreds or thousands of transactions within a 3 to 6 month period of time. How do you actually go through those in the right rigor and discernment as a human when now that we have these great tools with large language models, that we can actually start to summarize the transactions that are more meaningful, right? Where are there key networks within those transactions, or what are the intended purpose of those transactions, right? And so analysts can go into their workflow and sort of look at these transactions individually if they like to, but they start with a summary of what transactions and their purpose are, so that they can immediately contextualize the nature of those transactions against the customer and who they are. The second piece that we're using it on is, of course, narrative support, which is the obvious one. I think anyone that has used ChatGPT and the like, we've really started to use that. We do have a public AI tool that Block has created. You might have heard of it. It's referred to as Goose. Basically, it utilizes a lot of the base models like OpenAI, Anthropic, Google. But we actually also have started to use that in our process as well too, so that if we give the facts of the case, the customers, the transaction narratives into this, a narrative comes out nice and clean that can be utilized for all the way into SAR writing, but of course investigations where we close it out. It just drives a significant amount of consistency in how we frame things and articulate that. And then the final piece that we're still maturing, but I think is sort of where our future is going to be at, which is the guided investigation workflows, right? As many of you know, alerts are not created equal, and there are a lot of dynamic data points that could be used to drive the direction of the investigation. We are starting to use smart detection patterns of trying to augment where and push where the analyst should actually go down to their investigation, right? So automatically bringing in the relevant data points, so they don't have to spend time gathering data, but then can actually start going down the path of why did this party send to that party, and this guided workflow will actually help you prompt that. So I think, to bring it home, I think particularly on the transaction analysis, things that could have taken 30 minutes now take a matter of seconds, and the analysts can, of course, just spend their time focused on the why questions versus having to gather the facts. So this has really helped improve the analyst experience, but has also helped us find risk faster.
No, that's really valuable. So if we summarize, there's at least 5 different ways that AI can be used in the financial crime compliance context. So there's the dynamic risk assessment, there's SAR monitoring, smart transaction analysis, narrative support, and guided investigation workflows. So we had a question came through during registration from Sihui from a bank in the US on how to apply AI in the AML field. I hope we've answered that question fairly thoroughly. So moving on to the next topic then, which is a question that came up a lot during the questions submitted during registration, and which comes up a lot during discussion, is how do you ensure model accuracy and measure the success of AI enhanced processes? So maybe I can turn to the HSBC panelists, Chris and Long, to share some thoughts on this really, really important topic and a question that does get asked a lot.
Long, why don't you kick us off, and then I'll fill in any gaps.
So, can you hear me?
Yes.
Yeah, great. Okay. Yeah, so I mean, our internal, external partners, our model management, model validation, independent reviews, IMR audit. So they're my best friends. So we go through a lot of the reviews with them. The idea is demonstrate to them, not just to me, but also demonstrate to them that the AI model does, at the minimum, meet the requirements that what we set out to do, right? So your model standards, your model criteria, what your performance criteria are, make sure everybody understands them, make sure everybody is comfortable with them, and meet those requirements and demonstrate very clearly documentations. As you know, when we build these models, there are many iterations, many adoptions from different learnings from different markets and different outcomes. And one of the things I find super important is making those documentations simple, making those documentation updated to make sure everybody can understand them. We do a lot of training. We do a lot of calibration. We do a lot of empirical proving, and to make sure that we feel comfortable. As what I always say to my boss, Chris and I are there to keep him out of prison, to make sure that we meet those requirements and we meet those standards and everybody understand them. That also goes with our external partners, that all regulators that we meet.
Yeah, I would say you have the benefit of this on this session of having Long as a first line of defense colleague and myself as a supporting second line of defense risk steward. And Catherine, I think the question allows us to unpack a lot here. I mean, Long touched on a number of the key points, right? Your data, your model management, your model validation are going to be key. It's something we hear so regularly, but you can have the best model or tool in the world, but if you don't have good data or good controls around the data flowing into that, it's going to be all for naught. To Long's point, you can't underestimate the importance of model documentation. It needs to be clear. It needs to be understandable when read, and more importantly, explainable, especially when you're asked about it by checkers, whether that's your internal audit feature or function, like Long was explaining, or if somebody outside the bank is coming in and asking about it. The same goes for your supporting evidence. So then, there may be a couple of questions that the audience might want to consider if they're going down this path. How do you intend to demonstrate that the model you're putting in is better than a rule-based scenario? Long spoke to some of the different types of testing you can perform. We don't have enough time to go into it in detail, but maybe some key takeaway questions to consider, whether you're just looking at recall rates. Are there other factors that your entity or institution, maybe based on its operations, its risk profile, or risk appetites, may be looking at capturing with implementing the new artificial intelligence or machine learning capabilities you're putting in place? We hear this a lot as well when looking at artificial intelligence and machine learning, or any system change for that matter. Is the lens of no SAR left behind being applied? Are the cases delivered more useful information, showing that the solution's adding value? It's one thing to be filing technically compliant reports with government and law enforcement, but it's another to be moving the needle to demonstrate you're truly finding valuable risk. Conversely, I think we've all been at conferences or in other sessions where those questions have been asked, and it causes us to have some introspective views to say, what are we actually doing? What is the end game here? All that at some point also, to the point that Long raised, needs to be independently reviewed, challenged, tested, and validated. And that's also where, if you're looking at the model itself that's supporting your system, understanding what your model risk frameworks look like, how these are intersecting with your internal governance processes, and to the point that Long raised, this is where independent audit may actually be your friend and providing some value add as you progress. A lot of this stuff is not just based on our experience, but I think that you'll also see in some of the documents and attachments we've provided as part of this presentation. It also comes through in Wolfsberg's 2025 statement on effective monitoring for suspicious activity.
That's really valuable. Thank you, Chris. I think it's a really key point to make, is that accuracy is not just about the model; it's also about the documentation and the surrounding processes, and being able to explain those to your key stakeholders, to provide that training in how to make sure the model is accurate, is calibrated, and has been empirically proven. One of the challenges that sometimes comes up in the context of countering illicit finance programs in financial institutions is, you need sufficient data to train your model, and only a very small number of traditional transaction monitoring alerts result in SARs. How do you, maybe Long, you can address this point on, how do you address that? And is synthetic data part of the solution? So what is that, and how can that help?
So I don't want to give up our secret sauce, but AI models are inherently data hungry, right? So you can use a human to process through certain amount of data that's But in light of compared to AI and machine learning and my algorithms, I never have enough data. I can always use more data. So how do you get data? So there's sometimes it's not enough to that you can extrapolate data from your existing platforms. Sometimes we have different markets that can leverage data from, but synthetic data is where it needs to be. As we continue to build out these models, these AI solutions, that synthetic model in combination with authentic model, authentic data, synthetic data, and authentic data in combination will definitely be a big. Definitely a big part of the going forward.
That's very helpful, thank you. And no need to give away your secret sauce, Long. We can all do our own analysis, but I think it's a really valuable insight. And if we do want more on synthetic data, if our audience would like to understand that more, we actually do have a recording in on our website of an interview with a data scientist who talks quite a lot about synthetic data in this context. So moving on to you next, then. Scott, when you are, we've built our model well, we've tested its accuracy, we've validated it. Can you share your experiences on how to provide feedback for these detection models to make sure they are continuously improving, and how do you perform quality control and quality assurance on an ongoing basis?
Yes, and building off, Chris and Long's statement, I mean, I think the value at stake here is couldn't be higher, right? Because it is exactly about the continuous feedback back into these models, right? If you think about any of our institutions that we belong to, anytime we open, we create a new product, go into a new market segment, new geography, we're bringing in new iterative, nuanced risk. And in order to make sure that the models stay current, they require, continuous feedback into it, right? And so quality becomes ever so important. And you can see the downside of it too, right? So if there's over detection that creates noise, you can overwhelm investigators and potentially delay identification of serious criminal activity. And obviously, under detection means that you're missing critical signals of things like human trafficking, drug trafficking, and other serious crimes. So it's not just a technical requirement to provide feedback. Every false positive just means time not spent on real risk, and every false negative could just represent more criminal activity on the platform. So quality assurance right now matters more than ever. Specifically, we have four key areas that we are working on to sort of make sure that we are accurately, tagging the right flags and providing the correct feedback into the models. Now, we have our traditional QC and QA processes, our in-process QC, to make sure that our analysts are actioning things correctly and using sound judgment, and QA, of course, with an independent review. Most of you would be very familiar with those kinds of processes. But I think one area where we are stepping up our approach is actually through double-blind reviews in order to try to work on reducing bias from the system. And so what double-blind reviews are essentially where you have two different analysts work the same case independently from one another, and then they when they submit that case, if they agree and there's alignment that yes, this is suspicious, or no, this isn't suspicious, then you move on. But if there's a disagreement, this actually goes to a senior analyst that becomes the arbiter and either provides performance feedback or continuous improvement opportunities either into our process, but importantly, determining what the right outcome is, again, so that it feeds back into the model accurately. We have been doing this manually, but this is actually going to be built directly within our case management solution by the end of this year. The third thing that we're doing is parallel processing, and this is really about performance management, again, and consistency across our teams. We do have a large workforce, a contracted workforce located around the world, India, Bulgaria, in addition to our own US-based full-time employees. And what we do here is that we make sure that no single queue is worked by just one team. And here, a certain percentage of our queues are worked by different teams, and so that we can compare the performance and the output queue by queue and like alert by like alert, right? And so at the individual analyst level, we can see if there are differences in escalation rates or SAR filing rates versus closure rates, and we can intervene from a team leader perspective to see where there might be differences. Again, also learning where we can improve the process based off of gray area cases that will help us improve training and the like. And the final thing that I think that we're doing, which I find to be quite interesting, is what we call prevalence sampling. And so this is where we take a look at any transaction, we randomly sample any transaction or customer that has not alerted in any of our systems. And we look at it for bad activity. And this has provided valuable insight into where might we be missing risk, or where might our models actually be not capturing something that we find interesting. And so here we built effectively a machine to actually identify these instances and feed them into our detections team, the equivalent of Long here at Block, and to identify how we can improve our models or even write new rules to catch risks that we actually haven't identified. But I think the key takeaway here is that, particularly for those of you that are on the quality side of the house, this is a very good time to be on quality, because it matters more than ever that we're all moving into this machine learning paradigm.
Yeah, for sure. That's really useful, Scott. So I think it's a really valuable point to remain focused on what is the objective of this monitoring and these activities, and that is to identify illicit activity. The implication of resources being used less effectively if the right tools aren't in place is that those illicit actors and the harms that they prevent are not being detected as effectively as they could be. So really good point about the actual real world implications of effective use of the tools and the resources and the data that we have. I'd like to ask whether Scott or Long, you want to add any comments to the comments that Scott has made.
Yeah, I actually think that, Scott, you hit on a good point. And I think there was actually a question that came through from, apologies if I'm not getting the name right, Julio, with regards to how you're looking at how the in-house model may be performing against previous solutions. So Scott touched on the fact that he's trying to see how he can feed information in that the prior system didn't necessarily detect. When you're looking at a broader AFC or a money laundering compliance program, it's multifaceted, right? It's not just your transaction monitoring system, but it's other detection sources that you may want to feed in. So to Long's point, those are extra data points. So one of the things that you may want to look at when you're putting a solution in is how many of these types of risks that your prior system did not identify are you then able to systemically identify on a go-forward basis with the result of this new solution. That could be potentially one of the victory conditions in terms of total risk you're identifying. And what was previously a situation where you might have been waiting for somebody to see something and say something, to then have a system that is now trained to detect that risk, which was previously, by and large, undetectable.
That's a really valuable point as well, Chris, that it allows you to uncover some of your previously unknown risks as well. It also brings us nicely into our next question, but just to touch on a couple of the questions that came through during registration. So we had Catherine from an FX business, and we had Maria from a credit union, who both asked questions about validation of AI and making sure that the models are explainable and auditable. So hopefully our panelists have addressed those questions for you, Catherine and Maria. But stepping on to an equally important point, and a question that comes up a lot is, you, like HSBC and Block, have achieved successful outcomes. This is an implementation at scale, measurable outputs, and significant benefits for both of your institutions. So having achieved success, what advice do you have for other institutions who maybe considering using AI, where should they start? What advice do you have, and where they should start? What are the conditions necessary for success, and what would you do differently if you're doing this again? And perhaps you can also add some comments if you have any on the human aspects that need to be considered as well, because AI is not just a technical implementation. There are a lot of human considerations that need to be covered. So maybe Chris, I can start with you, and then I'll move on to you, Long, and Scott, you can step in finally.
Sure. For HSBC, and I think for anybody, given how new and significant a change the move to artificial intelligence and machine learning can be, particularly in the US marketplace, lesson learned, we took a very conservative approach. As was previously discussed, we had a lot of support. It wasn't just anti-financial crime specialists. It wasn't just model developers. We had risk stewards reviewing and challenging the process and results. As Long indicated, and we spoke to, we had audit coming in behind to make sure that everything worked. But we realized it was a significant step. It wasn't something that we weren't just going to develop in-house. That's why we partnered with Google. But that also lends itself to making sure that you have relevant internal engagement with teams across your institution or your enterprise or whatever organization you're with. For regulated financial institutions, that might be vendor and third-party risk management, your regulatory compliance teams, your legal departments, clearly information technology and information security, as well as those data oversight functions that make sure that everything's getting done properly and correctly. I would say, though, maybe one of the base level items, because we hear so much about AI out in the market right now, really just make sure that you're not launching AI and machine learning for its own sake. We touched on it earlier, but you really should make sure that you're defining success criteria that are right and relevant for your organization. At the end of the day, on the topic of victory conditions, for us, we've spoken to it. HSBC wanted to find more financial crime risk. We wanted to find it faster. We wanted to do it more efficiently. We wanted less customer friction. And we also wanted to just deliver it with more meaningful information to law enforcement. Long, anything else you wanted to add from our perspective?
Yeah, those are really good, great points. One thing I always want to add in this is, to your point earlier, don't launch AI for the sake of telling people you've got AI. I always say AI is a supplement to HI. Have that process identified, understand the data, understand how it flows, understand what your systems does. AI only enables and make it even better and faster, as Scott kind of said it earlier. AI isn't a solution for everything. There's good things and bad things about AI, and sometimes you have to evaluate whether it does make sense to deploy AI for perhaps a scenario that generates 10 alerts every year. Might not be necessary. So just have a plan that be very open about it and be very clear what the benefits you're going to get, and understand your process and your source and what the logic behind it, and then it'll be fine. It's a journey, but it's a great journey. Scott?
So I think the key points there, just before I circle around to you, Scott, for your views, are the key points that I'm picking up there are AI is a great solution for problems that it's well adapted to solve, which is, that's kind of stating the obvious in some ways, but it's not the solution from everything. And you really need to be clear on what the problem is that you want to solve, and evaluate whether AI is the solution to that problem, or maybe whether it's a solution to some other problems that it can be used to enhance other aspects of your business. So, Scott, what are your lessons learned, and what advice would you have on others who are starting a similar journey and maybe using AI in the way that you have at Block?
Yeah, and particularly feeding off the last part of your earlier question about what are the human impacts to this as well, too, right? Because I think it's clear that there's often this undercurrent of anxiety and replacement. Will our jobs be replaced by AI? But I think, we're trying to really flip that narrative, right? Because I think for yourselves, it's your expertise and institutional knowledge are, they're not just relevant. I think they're in fact critical to the success of your own organization, right? So you are the experts in your institution's risk landscape. You understand the customer behaviors, you understand the products, their vulnerabilities, and you recognize, where you differentiate from the market, right? And you know what doesn't look right, right? And like I said earlier, that is just going to change, right? As you roll up new products, as you go to new markets, it is just going to change. And where humans play on this sort of edge is exactly that. How do I diagnose the new thing that's actually coming in? And yes, I can use AI to sort of help automate some of the things that we see over and over again, and hopefully move on from those things off of our platform. But again, this will sort of augment your experience and not replace you, right? So I think it really is. Successful companies will win here when they realize that you're not replacing the human intelligence, you're just harmonizing the two, right? So you take your understanding of the financial crime risk that's unique to your institution, and then partner with the latest tools and technology to make sure that comes to life day in and day out.
No, that's really valuable. And I think one of the key points that I'm hearing from all of our panelists is about the human intelligence aspect and the critical involvement of people in these implementations and the ongoing use of AI. So hopefully Shane from the bank in the UAE and Eleanor from the FX business, that answered some of your questions about the advice for small or medium-sized firms starting their AI journey and how you measured some of the costs and benefits of AI. We do have time for some Q&A, and what I'd like to do first is come to a topic that was a hot topic in our pre-registered questions, and we've also had questions in our live Q&A from Olivia and from Pratyasa, and their question is, how have you, if I draw the different kind of themes of these various questions together, how have you engaged regulators on this topic, and are there any other key external stakeholders? So, how have you engaged them, and what's your, how do you make sure that you're remaining compliant with regulatory requirements, particularly in an area like AI where it is still rapidly evolving?
I think that's a really fair question, Catherine, and we've had experience on that. It's a journey, for both the internal colleagues and the external stakeholders. Early on, from HSBC's perspective in the US, we had the benefit of not being the first to market for DRA. We had other jurisdictions go ahead of us, but we built on that experience, and we had a teach-in whereby we brought both internal and external stakeholders together for a series of initial walkthroughs. We provided an overview of our implementation approach, our experience in other regions, and really how we were going to bring the dynamic risk assessment to life in the US market. We supported that and underpinned that with internal and robust governance. That really demonstrated to those external and internal stakeholders that we had a handle on what we were doing, and we're bringing the right individuals and aspects into scope. Long had touched on as well, we had audit sitting next to us. I think anybody who has a well-established financial crime risk management program understands that audit is a key component of that. And when regulators see audit engagement, they get an extra level of comfort. It wasn't just a one and done on those updates either. As we progressed, we coordinated regular updates, both internally and externally. I think that we really understood and appreciated that the regulators had a job to do. Put yourself in their shoes. They're balancing, taking a look and making sure that a bank that's taking a pretty significant step forward in the US with a leading edge innovation that aligns to the spirit of the AML Act of 2020, that they were keeping an eye on us while making sure that the responsibilities entrusted to them as an arm of the government were being adhered to. So that's why they were making sure that we were progressing responsibly, that they were making sure that HSBC was moving ahead in a safe and sound manner, and that frankly, the U.S. financial system wasn't being put at risk. So a
So
lot of respect out to the folks who were engaged.
to add to what Chris just said is, as we indicated earlier, we've engaged this DRA journey a couple of years before. So we've in different jurisdictions, we started with FCA in the UK, Hong Kong MA, UAE. So we've gone through different jurisdictions and with different with initial set up in different jurisdictions, and we'll learn over time, and we benefit obviously in the US, but benefit from all the learnings from the other jurisdictions and learn how to put things together, how to understand. And to Chris's point, then education of internal stakeholders and as get everybody aligned to the single view is great. There's a lot of I would say there's a lot of misconceptions of AI, and the idea is when you engage regulators, just sit down and tell them what you know, what you don't know, things that you're working on, things that you have issues with, work it out. They are fair. They are also learning at the same time, especially with this new topic. So it's all about bringing your partners with you, and not just go charge ahead by yourself.
And do you want to add to that at all, Scott? Is there anything that you want to add on your experience, either from your current role or your previous ones?
Yeah, I think I think what matters when you're trying to get any model through to a regulator or even internally, right? It really does come down to explainability, right? And interestingly, I think actually we are actually starting to use AI to help us explain our models as well too, right? But at the end of the day, if you can take a data-driven approach to show how this model is actually successful and why other previous models are actually a deterrent to actually finding financial crime, you bring the conversation to sort of an outcome-driven approach, right? And it is really an opportunity, and I think where I've sort of seen success in prior roles is really articulating what the real world impacts are of this. Actually, one of the most gratifying things I've seen here since joining Block, I've been here for about 9 months now, is that in addition to filing SARs with FinCEN, as we all do, we and many of your institutions might have done the same, but we've for example partnered with NCMEC, the National Center for Missing and Exploited Children, right? And so what that means is that when we have cases of child exploitation or human trafficking, we also file with them effectively. And there was a particular instance where we did our regular case and we filed a SAR and we also filed, and within the exact same day that case was picked up by NCMEC and an arrest was made in the exact same day. Right, that rarely happens. I've been doing this for 25 years, and to get that kind of gratification is quite powerful. And to the extent you can bring that into your story and your explanation on why these models matter, has also been quite a useful tool in moving forward on these kind of model implementations.
No, that's a really fantastic real life example of the real life implications, and one which I could see why that would be persuasive to external stakeholders as well as your internal stakeholders. And I think one of the other key points that has come out, in addition to considerations like explainability, is how your internal stakeholders, like your internal audit teams and other kind of test and assessment teams internally, can actually be part of presenting strongly externally, because those external stakeholders can see that a level of rigor is being applied internally, and that provides them with reassurance. We have time for one more question, I think, before we get to our final wrap-up panel round robin question. This question came in through the live Q&A from Greg, and what he was asking about is, mostly so far we've spoken about implementing AI in a money laundering or transaction monitoring context, but some of the considerations could equally apply to sanction screening. So typically they use rule-based triggers and they require context and narratives around those things. So Long, are you able to provide a response to Greg's question, and then I'll invite the other panelists to add their experience as well?
looks like we lost Long. I can go first because I do have a bit of a response while Long comes
That sounds
back.
great. Thanks.
Yeah, I know. I think it's a very astute question, and you're right. I think there's a perception that sanctions is just a black and white, if this then that. Is this a name match or not? But the nuance, particularly in transaction screening, is not so black and white. And I think particularly in my experience on a P2P platform, a lot of context matters, right? So on our Cash App platform, you will quite often get a lot of jokes, things like, that will pop up like Cuban sandwich or Cuba trip. And it, as many of you know, that tends to generate a lot of false positives and a lot of noise. But where I think AI can actually learn is actually on context, is actually also on jokes, right? So again, on our platform, we have what we call mandatory initiator notes, which means, I think like Venmo, you have to put in a reason for the purpose of this payment. And as you can imagine, with keyword searches, that's going to blow up, particularly within sanctions. But what we've realized is our analysts have had to become experts on, jokes and slang, and even looking at emojis and what they mean and what their inference is, and then also from a risk appetite perspective, are we comfortable with realizing this was actually just a joke, and I don't think that there really is a sanctions nexus here too. And I think that is indeed an area where we can start to use AI to help on the sanctions front. I don't know, Long, are you?
Yeah,
I think Long
I'm
might
back.
with us. Did you want to?
It's weird.
Add
Sorry
that?
about the connection. So, for sanctions perspective, if you consider for transactions, it's a lot of it is entity resolution. Make sure we have the right entity, understand the context of the transaction. So AI definitely has a huge benefit of be able to repeat things decisions you made. Obviously, be able to provide that context. Sometimes a human cannot have that much context. We always talk about human understanding of certain context. So somebody who's very much focused on the U.S. market does not necessarily understand the context of Asian markets and Chinese transaction addresses and naming conventions and such. So AI can definitely aid in a lot of decision points to the point of making documentation. Look, decision points, right? How do you determine decision points? If you can codify those decision points, and that it inevitably create that decision path map, which can create to a narrative, create to a decision point that you can let the machine to repeat. There's also operational benefits because sanctions transaction screenings are very fast. You need to do it very quickly. So that can definitely aid into repeatability and the rapid operation of those things. Understanding the context of the transaction, understand the patterns, understand the decision points, understand that AI can give you that significant amount of insight that the human probably won't be able to.
Yeah, that's fantastic. Thank you, Long.
Just to add on to Long and Scott, and to pick up on that point, I think this comes back to the concept of the convergence that we see of a number of different types of predicate offenses coming through the professional money laundering organizations. And this is why it's important to have the human in the loop, why it's important to make sure that you're getting the right information into the hands of an investigator. Because even though a platform like the dynamic risk assessment is primarily looking at the money laundering is the way in which those who are perpetrating, whether it's a sanctions violation, an export control violation, fraud, pig butchering, you name it, that's how they're moving the money. So if we're able to identify the typologies and how they are moving the money and make sure they're getting those alerts into the hands of the investigator is then able to zero it down, narrow it down, and get that right information and context to the points that were raised into the hands of law enforcement.
That is fantastic, very valuable. We come now to our final question, which is going to be a round robin, 1 minute each, a quick fire round. And this question is one that we typically ask at the end of a panel, which is where next and what's coming up. We also had this question from a couple of people on the registration. So Ayasami and Shintanu asked this question. So my final question for each of our panelists is, what still needs to be done to achieve the advantages of AI as well as the benefits of human intelligence, which we have emphasized during this webinar? And perhaps as an institution, what are your next steps? So maybe two points each. What needs to be done to achieve the advantages of AI and the benefits of human intelligence? And what are your next steps? Long, maybe I'll start with you. Then I'll go to Chris and finally Scott.
There's so much to be more done. I've got day one to, the week and a half of deployments. I got model improvements. We have on the docket to cover all the products, to cover as much products as we can, cover as much transaction types and product types as we can, to be able to dynamically learn and create new typologies, to be able to create synthetic targets, synthetic data for testing. There's so much more to be learned and so much more to create. One of the big things I think where we are going to focus a lot of our time is to be able to create future typologies, things that we don't see, things that we humans can make that insight. How do we use AI to create those typology, to understand the different patterns, different ways of people laundering money and doing illicit transactions? There's just so much more to be done and so much exciting things.
That's brilliant. Thank you, Long. Chris, 1 minute. What are your perspectives?
I think Long pretty much summed it up. Again, we're still fairly early, at least from a US perspective, on this journey. I think one of the interesting things that we'll probably be looking at down the road is to see how the outputs of the dynamic risk assessment will not only feed into our investigators, but may help inform us in terms of some of our other decisioning going forward.
Perfect. And over to you, Scott. What's, out of all of the, the possibilities ahead, what is next for Block? And looking more broadly, what else do we need to do to achieve the best advantage of AI as a society? And, keep human intelligence is very much a key part of that.
Yeah, that's right. I think specifically for AI in risk management and financial crime risk management, it's actually going to be integrating more insights and data from the business and the commercial side of the house, right? And so where we're, because how we see it is that we are going to be really good risk managers on the compliance side of the house if we deeply understand the first line in the business and actually how it operates, right? So I always say that, if we are really good at understanding where there is risk, we are also really good at understanding where there isn't risk, right? So what's next for us is actually, how can we as compliance professionals in our industry actually offer insights to allow for safe business growth, right? And the opportunity there is that we are not just seen as a compliance team that just says no to things, but actually we could come to the business, with some instructive customer intelligence that says, hey, maybe expand your marketing here, or actually we are very comfortable with this risk and we might suggest a product increase here. So I think the future is actually about bringing in more data from the first line in order to help us on the second line of the house.
I think those are really valid points, and they really highlight some of the commercial advantages that can come from effective use of AI in financial crime compliance. And I'd also highlight that when it comes to integration within an institution, that's increasingly important to respond to the use of AI by threat actors as well. So, for example, if we have synthetic identities being used generated by AI to create accounts, which are then used for loan fraud, you need to involve your credit risk team and your cyber team, as well as your financial crime compliance team. You have, North Korean IT workers trying to use, deep fakes to circumvent HR processes. Well, now you need cybersecurity, and you need your HR teams and, your internal risk management teams to be all working together. So I I have found this panel immensely useful. I'm sure our audience has as well. A huge thank you to our very expert panelists for sharing their real life experiences of how to effectively deploy AI in the financial crime setting. And as we said right at the start, the webinar is being recorded. So if you want to have another look at it, or you found it useful and want to share it with your colleagues or connections, we will be circulating the link afterwards. So thank you, panelists, and thank you to our audience for joining us today.
Thank you, Catherine.
Thank you.